The Nasdaq obviously we just continue to rip and rip and rip. And the real question is when does this kind of hit the fan? When does bad news actually relatively become bad news to the market? That's the real question. And that's kind of where we're stuck right now. But when you're trading and you look at the market, I think you have to just go based on technicals as of right now. The fundamental thesis, I believe, is there, and that's why I continue to make my money, get out of the market if I'm trading to the upside. I'm not trying to hold things too long. Now, that being said, I did make some purchases to the long-term account. I finally started adding some Square. That was one thing I really did love, around 60, 64. I got it around 64, which I'm fine where I got that in at. I'm definitely planning on holding that. But we have a lot of big things we need to look at, specifically what's happening here on the Fed balance sheet, obviously just only ticking to the upside. So when we dive into this, if you have questions, please comment down below. I would love to answer that, but let's get into it. Now, before we do that, we have to ask you to do two things. Consider liking and subscribing every single day. We, of course, are making videos for you so you are prepared. The news, fundamentals, technicals, everything in between. But as usual, I like to stay as transparent as possible. So yesterday, every Saturday, I do an educational video for you. And yesterday, I basically went over how I lost on Tesla, and I broke down that trade. I broke down the good and the bad behind that, where I could have taken profits, and overall the risk to reward based on that. And I break it down, really my strategy and how I approach losses, and then how I kind of evaluate them after the fact as well. I think it's a really helpful video. Go check that one out. Also, so everyone knows, if you were in the newsletter, you got first access to this, and these should be available tomorrow morning, so you know. But there will be around 45 to 50 spots available, 30 for the $30 tier, and then 15 for the $60 tier, which gives you full access to everything. But the $30 is a really good starting point, and it's a really good value for getting everything included. But you just won't be able to speak in voice chat or talk, just so you know. But you get everything else and all the updates throughout the day. And remember, once these go, there will not be any more additions for at least 2 to 3 weeks. But let's get back to the video. This week, obviously, we have PCE data on Friday. That's going to be kind of the biggest fundamental thing that we're going to get. What I will say is you will have more Fed speakers probably coming out. We had that blackout week from the past week, but we need to identify some things. Now, when the Fed members come out, I anticipate them to continue to say the same things. There's no real answer on when they're going to pause rates, right? They don't know that yet, but there's a big assumption in the market that that's coming very soon, which it most likely is. We've been talking about since November. We anticipate a pause to come by summer, June, July, and we expect 0.25 rate hikes until then. We've been saying this since November. You can go check. We expected a 50 point back in December and then 25s after that. We've been saying it for months, and that's what we're getting, right? It doesn't make sense to raise too much, but it doesn't make any sense to pause because we haven't started really dropping steadily on inflation so far, specifically core CPI and PCE data. And so when we look at this balance sheet, you know, there's also the question of, is this easing, right? That's the question. Like, are we done tightening? Are we easing? Because if you look back, you can go back to like a 6-month viewpoint, and you can actually do 1 year. So let's go to 1 year, and you can really see that we kind of peaked, and then we kind of started tightening, obviously going down, 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 right? And basically since November and October, when we really started hammering that tightening, what was happening, then we obviously spiked back. And the question was, is this easing? Is the Fed buying back assets? And they clarified actually at the last Fed meeting that it was not easing because they were just loaning money out to banks, but it still goes on their balance sheet. And so you're seeing the effects here. So we saw the first pop-ups of around 300 billion, and we saw another about 100 billion coming into this. So it's definitely saying that they're not done maybe stimulating or dumping money into banks or protecting them. So that's worth mentioning. And the market liked the way that this was. The market liked this reaction, obviously, because it showed that banks probably aren't going to go under, at least here in America, as of right now, right? And so as long as the Fed keeps helping, the market has no reason to take this necessarily that bearish, okay? I'm not agreeing that this is bullish news. I'm not. But I'm just telling you how the market's interpreting this, because I see a lot of people asking questions of, why are we going up? Well, that's why, okay? So looking at some of the technicals, let's break this down. Again, today's video is not going to be super long. We're going to get right to the point. So what I encourage people to do is to always zoom out to like higher time frames, okay? And a lot of people are like, well, Tyler, if we look on the 5 minute, we have a nice wedge, and you know, this has to break down. It's just the way it is. Now, again, I try to come at this the most unbiased viewpoint. Since February, even when we were pushing up, I said a statement and people did not like what I said. They were like, Tyler, you don't know what you're talking about. And I was like, whatever. Okay, you come to this channel to get an unbiased viewpoint from me. Also, so you know, the newsletter was today, so make sure you're subscribed to that. I'm sorry I did not give that a shout out. Jay's gonna kill me, but just know that. Anyways, so when we look at what's happening, from a fundamental standpoint, I am as bearish as I've ever been, right? And you're going to say, well, Tyler, what about 2008? Well, obviously I wasn't trading in '08. I wasn't trading in the dot-com bubble. I was too young, right? I'm 25. When I compare COVID instances or things that have recently happened, I think right now, kind of all the shit's hitting the fan at once. And now we're seeing how it's affecting banks. And I think that thesis is right, looking at the market from a very bearish standpoint, because we're seeing the effects it's happening on banks. So I think that thesis is right, but we can't anticipate what the government and what the Fed is going to do when these things happen. Okay, so that's the catch-22 part. You can only predict certain things to a certain point because you can't anticipate the reactions from the Fed. We can only anticipate what the Fed tells us they're going to do, which so far it looks like they're going to keep trying to help these banks out. They're going to keep trying to raise rates, and their main focus, based on the last Fed statement, is inflation, right? That's their main focus, getting inflation under control, even if they have to keep loaning money out, which I'm like, dude, how does that fix the problem? But look, it's not me. It's not me. Okay. So that's where we're at. So we look at the daily time frame here. You look really good. This was your previous supply zone that you had up here. Now it's just a major key level, which you've kind of already broken above once already, 2 times. But you can see, so we break up, we push. This is a daily time frame. You're holding above. Now you're above the supply, holding above it. You get 2 rejections. Now you're holding. So you look good going into this week. Now, again, where is my viewpoint on things start to get really bullish? If you can make a new local high above 13.75, you're in the territory of getting back potentially into a bull trend. Just going to say it. People are going to get upset. It is what it is. Even though I'm very bearish on everything happening, from a technical standpoint, that's where you get extremely bullish from that viewpoint. Personally, that's my opinion. Now, going into ES, I think you have a lot more work to do as we speak. Now, Friday was a really good day for ES, and yeah, it was a really good day. Why? Because we kind of saw this like little bit of a disconnect where ES was pushing up, getting rejected, and it's kind of been just like trending sideways. If we go like to a 4-hour chart, you can really see you were in that downward channel. You were just sitting on top of that 200 SMA on the daily. You were just kind of chilling out here, and that's ultimately where you were. And you can really see, one second, let me pull that indicator up. Yeah, so it's right there. You can see you're just kind of trending there for 3 days. Now you broke up on Friday. So all signs point that ES wants to get a little bit of continuation of 40-80, right? That would signify probably a bounce on the banking sector, which I'm not saying they should bounce, but based on technicals, that's what I assume based on where we're at right now. We also have semiconductors going berserk. Now, you're probably going to get a pullback on most of these tech names, but it's not worth trying to catch the tippity top because more than likely you're going to fail if you try to do that. So right now, what's been my strategy? What is the point of this video? What's my tip, if you will, right? Not financial advice, always do your own DD. But as we look at this from a 4-hour standpoint, and someone told me in my last video, don't look at stocks from a 4-hour standpoint. I'm just like, okay, I didn't read that in the book. But if we look at where we're at, you have an ascending triangle forming out here on the 4-hour time frame, which is a continuation pattern on the Nasdaq, and you look pretty good. You don't look bad, okay? As long as you're making higher lows, you look really good on tech. And tech, as bad as banks have been, tech has had no sign of weakness. Okay, that's the big things here. Again, so what would I be looking forward to for a signal for a downside or a major pullback? PCE coming out poorly, which I'm going to be covering all week long, and then getting back into CPI, PPI, and some of that data as well. If we start to see consumers hurting as well, which they should start hurting, but it won't happen for at least 2 months, most likely, because you're not going to start seeing the effects on their credit rates until like it's going to take time to really start affecting that data. It's not going to come in like tomorrow. If their rates go up, next week, it's not going to come in the week after. That's just not how data works. It takes time to process that. So you have to also understand that. So there's a high possibility we could be setting up for a really good summer. Like going in from May to June, it could be very, very nice to the upside. And so I think we need to be preparing for that, right? So this is very interesting of where we're at, and it has a lot of potential. Now, if I'm looking at upside opportunity, I already know people are gonna have like, what plays do you like to the upside, Tyler? Things have already run so much. Number one, I'm gonna tell you right now, Apple is probably one of the best looking names. I posted this on Twitter the other day. I recommend following on Twitter so you can get the updates. Now, past 2 days have been kind of slow on Twitter, but again, like if it's a weekend, I'm not going to post that much on Twitter. I'm not really after so many clicks or getting, a million subscribers. It's just about giving you guys content, right? That's all I try to do. I give you guys content on things that I like in the market. I'm never going to try to click farm you, right? Unless I'm giving a thumbnail. Obviously, that has to be kind of clickbaity, right? So where we're at here on Apple, as you can see here, massive level that is held since October, swing high. I mean, arguably back here through September as well. But you can see you've pushed above. As you zoom in, you've mounted and you're pushing up now. I have to anticipate a touch of like around 164 pretty quick. 164 is my target on Apple. I think it's going to happen. Pretty big bull here as well. Next target after that's going to be around 168 to 170. Like that a lot there. Loving Microsoft. Again, I mean, dude, it's an absolute beast. You're at a major level. If you can mount 280, you're killing it, okay? So a few levels to watch here on Microsoft. Okay, let me zoom out just real quick. One, you have a giant gap here, probably gets filled. I'd be looking for it about 285.5. That's going to be target number one. Again, another ascending triangle. Again, I'm not looking to go long before we hold that level. So I'd be looking like at a 2 hour or 1 hour for a mount of 280. If that comes, then you're expecting a push up to 285. You could start scaling out once you get to previous swing highs right here around 283.5, 284. But I think the gap most likely does get filled. Personal opinion, as long as this momentum continues, which it looks like right now it will continue, unless another bank, like in my opinion, Deutsche Bank, starts to show relative weakness on the market as a whole. So that's where I'd be looking at there specifically. I also mentioned here, SQ, you can go the options route. I've been honest, this has been on my mind all weekend. So when I'm looking at SQ, I'm giving you guys like a visual of things that I'm looking for here. Like SQ, there was a technical buy and it was a fundamental buy for me. I think there's some issues they have as a company, but that short report couldn't have been better timed. I mean, honestly, like I've loved Square for years, and I think this is finally like an opportunity where I have the capital to dump into it, where I can actually see a really good return. So looking at Square, one, you're at your 52-week low demand. Okay, very low, 56, 57, all the way down to around 51. It's a major buy zone for me. If you zoom out further, I don't even think you're going to get a range. You're going to have to go way back. Yeah, so you have to go all the way back to COVID lows, which are roughly down at 31, which could happen, 100% could happen. But you have a lot of supports here, as well as another key level around 58.7, which you're holding there. So this is what I'm looking for. This is what I like. And this is what I kind of look for with buying some of these stocks as well. How are they reacting at their previous demand zones, major demand zones on weeklies and daily timeframes? And so far, it's so good with where we're at. And that's why I like Square. So I've also been debating going dated in the money positions on Square, but I think when you're going dated in the money, and I talked about this in the beginning of January as well, talking about in the money positions, but when you're looking at going in the money, I don't think it's worth it on options in the more speculative field. And I'm not saying Square's a speculative stock like, let's say, Astra or Neo or maybe SoFi. Those are a little bit more speculative. I think Square's definitely made a name for itself and they're a leader in the space. But what I will say is that you're taking a little bit more risk. If I'm looking to go more in the money, I'd be looking at a name like maybe Google, Amazon. Those are names that I like a little bit more because relative, these are biggest names in the market. Google, obviously major name. Amazon, major name. And relative to where they are from all-time highs, you have a lot of room. Like Google, you break out of this 105 region, I mean, you have room to the upside, right? 122, highly possible if indexes really keep running, especially with this like surge of interest behind AI and then volume coming into those stocks specifically. Amazon, again, I think your lows are down to around $80, which is crazy to think about. You're at 98 right now. Easily could get back to 120. Easily get back to 146. But I mean, your all-time highs are coming way back up here at 188. So the value you're getting on these makes sense. And you could definitely start seeing the nasty bounce come. Remember what happened back here January through February. You went from 86 all the way to 113 in a hurry at that. So these are names that I think you have to be watching. And again, if I'm going in the money, I'm going dated, like 6 months minimum when I'm looking at these names, just because of the possible pullback that could happen with the concerns around banks. Now, I'm not screaming go long or anything like that, but from a technical standpoint, you look set up to continue. From a fundamental standpoint, I don't think we're there yet. But what I will say from the fundamentals that point to me is saying the potential of upside is all about what the Fed's doing. Yes, they're raising rates. Yes, their focus is inflation, but they're also proving that they're not going to let these banks fail right now. Okay. They are not going to let that happen, at least from what they're doing with their, their, I can't even think what I pulled up. Their balance sheet. Sorry, I pulled this up. I can't even remember the name of it. But that's what they're doing right now. So it's kind of, you have to take a middle ground with what you're looking at. And that's where I stand right now. When we look at big option chains as far as SPY, Qs, they still look bullish in the short term. Shout out Cajun. I got to give you credit, Cajun. You killed it with looking at that. Dated June, July's, they're looking a little bit more downside, but that's just because they've rolled out those positions and they can roll out again. But we've seen some of the most bearish chains be established for September and December. So it's like, again, they're assuming there's a possibility this could be a very hot summer to the upside on the market. So again, that's what I'm looking at. That's what I'm viewing. And again, when I'm trading the upside here, I've been very quick to get out of positions, right? I'm not trying to hold or leave all my runners or be super aggressive to the upside. That has not been the mentality here, because I think you have to be aware of what's happening. If you have stock, that's different than having an option though. Stock, of course, you believe in the company you're holding, that's different. But from an option standpoint, you got to be a little bit more risk adverse, in my opinion right now. That's for me specifically. I'm talking basically to myself as a whole, and I'm trying to give you an understanding of that as well. So if you have questions, please comment down below. Video will be coming out tomorrow, breaking down the market and stocks I'm liking there. That's what I'm looking at right now. Have a good one, traders. And by the way, Apple, Microsoft, my favorite names right now.